Well, the Reserve Bank of India has reduced the key policy rate, the repo rate, by 25 basis point in its bi-monthly monetary policy review. And this 25 basis point repo rate cut has come in the backdrop of a continued slowdown in the Indian economy. We witnessed that the growth rate slumped to 5% in the first quarter of the current fiscal. And the Reserve Bank of India, keeping in view the slump in the economy, reduced the rates by 25 basis points. Well, many experts were actually hoping for a larger quantum of rate cut, hoping it to be around 50 basis point, or in excess of the 35 basis points, which was an unconventional rate cut announced in the last monetary policy review. Well, the RBI, with its 25 basis point rate cut, has actually left room for another 25 basis point rate cut, which could come in the next policy review in December. Till now, it is a 135 basis point rate cut, which is 1.35 percentage points. And even the governor of the Reserve Bank of India, Shaktikanta Das, in his post-policy press briefing, said that the RBI is willing to go to any extent to revive the economy. And in that backdrop, they will probably continue with the accommodative stance which they have taken. Well, recently, even the government has announced a slew of measures to pump prime the economy. The most important being the cut in the corporate tax rate from 30% to 22% base rate, hoping that this will revive private investment within the economy. But the massive cut in the corporate tax rate has also given rise to fears of fiscal slippages. Whether the government will be able to meet its fiscal deficit target of 3.3% in the current fiscal. Well, the government actually comforted the frayed nerves of many policy analysts and all the stakeholders by saying that they are going to stick to the fiscal deficit roadmap, and which is 3.3%, the target which they have set for the current fiscal. And they have also announced that they will stick to the borrowing roadmap. That means that they haven't announced any new borrowing plans, which actually comforted the bond market as well. After the announcement of the corporate tax cut, the bond yields had actually spiked. But after the announcement by the government that they are going to stick to the borrowing plan and there will be no new borrowings, the bond yields came down. So the RBI governor also acknowledged the announcement that was made by the government on the fiscal deficit front, and said that there is no reason to doubt what the government is saying on the fiscal front, and that has given some room to the RBI to cut the policy rates. Well, the RBI has reduced the growth projection, the economic growth projection for the current fiscal from 6.9% to 6.1%, which is a huge reduction by the RBI, acknowledging that there are pain points within the economy. For the second quarter, it's 5.3%. The growth projection is 5.3%. And eventually the RBI foresees that the growth momentum will pick up and there will be an uptick in the economic growth rate going forward.